So we are going to start MCQ bank for prime cost. Okay. So in this, they are given as detail direct material purchase cost, direct material consumed, direct labor cost, direct expenses, and manufacturing overhead. Now, while computing the prime cost, only the direct cost shall be taken into consideration. Hence, this manufacturing overhead is a tricky adjustment given here. So we need to ignore it. Another important tricky adjustment which is given is with respect to direct materials. They have mentioned both direct material purchased and direct material consumed. But while calculating the prime cost, we need to consider only what direct material consumed. So in this case, so our answer should be 90,000 plus 60,000 plus 20,000 totaling to rupees 1,70,000. So the correct option in this case is option number C, which is 1,70,000. Moving on to the next MCQ, it is talking about calculation of the profit. So given they have mentioned cost of the product, which is 10,000. They have also mentioned profit, which is 25% on selling price. So to approach this, first we need to understand the relationship between cost as well as profit. So, cost as well as sales. If we say 1 by 3 is upon cost, then it means 1 by 4 on sales. How it happens means 1 by 3 on cost means numerator will remain constant. Denominator, we will add numerator and denominator, which is 1 plus 3. So which becomes 1 by 4. So 1 by 3 on cost is equal to 1 by 4 on sales. Now 1 by 4 on sales means 25% on sales, which becomes 1 by 3 on cost, which happens to be 33.33%. Now applying this to the cost, which is 10,000 into 33.33%, we will get our profit element, which is rupees 3,333. So correct option in this case is option number C is our right answer. Moving to the next MCQ, it is talking about computation of reordering level. They have given us consumption of the raw material, which is 100 and 200 units, both minimum as well as maximum is given, and delivery period, that is minimum delivery period, which is 14, and maximum delivery period, it is 28. To compute reordering period, the formula is maximum consumption into maximum reorder period. So here the maximum consumption is 200 units and maximum reorder period or maximum delivery period is 28. So reorder level will be 200 into 28. The correct answer is 5,600 units. So the option is A. Correct option is A. Moving to the next question, MCQ, it is talking about calculation of cost of sales. So here this is also an interesting tricky question because right now they have mentioned net working cost is 2 lakh. Office administration overhead is 1 lakh. If you see, I have red mark opening work in progress and closing work in progress. Okay, now we have to remember that net work cost itself is computed after making the adjustment of both opening work in progress as well as closing work in progress. So if you are starting from net working cost and to arrive at cost of sales, we don't have to consider opening work in progress and closing work in progress again. So this is a tricky part of the tricky part in this problem. Next, they have mentioned about closing stock of finished goods, which means there is no opening stock, which is mentioned there, and then selling overhead is 10,000. Now we know that network cost, which is factory cost, 2 lakh plus office administration overhead, which is 1 lakh. We will get what? Cost of production, which happens to be 1 plus 2, which is 3 lakh. Moving ahead, opening stock of finished goods is not there. Then closing stock of finished goods is given, which is 30,000. To arrive at cost of goods sold, from the cost of production, we need to add opening finished goods and deduct closing stock of finished goods. So here 3 plus 4 minus 5, which is 3,30,000. 3 lakh minus 30,000, straight away 2,70,000. To that, we need to add selling and distribution overhead, which is 10,000, which is given the question. So cost of sales will be cost of goods sold plus selling and distribution overhead, which is 2,70,000 plus 10,000. So correct answer is 2,80,000, which is option number B. Moving to the next MCQ, it is regarding computation of EOQ. The information given is annual consumption 24,000 unit, ordering cost 10 per order, purchase price 100 per unit, carrying cost 5%. Now carrying cost, it is mentioned 5%, so we need to find out the carrying cost value. So which will be nothing but purchase price into carrying cost percentage, 100 into 5%, it is rupees 5. Next, applying the EOQ formula, which is nothing but 2 into annual consumption into ordering cost divided by carrying cost. So 2 into 24,000 into 10 divided by 5. Solving this, we will get 309.83. It is already mentioned the question EOQ will be approximately. So the correct answer will be option number A, which is 310 units. Next, let us move on to the question number 6. Again, it is talking about reordering level. So given information is safety stock which is maintained, which is 1000. I can also say that is minimum stock which is maintained. Next, consumptions per week. The regular consumption per week is 500 units, and it takes nearly 12 weeks normally to get my stock replenished once I order. So if you see here, we need to understand that company follows a policy of safety stock, that is they will keep 1000 units in your godown, and by the time the goods are reached after placing the order, it will take nearly 500 into 12. That much consumption will be going out of stock. So that also I need to consider in my godown. So the formula here we will apply. There is a second formula for applying the reorder level, which is safety stock consumption per week plus total time taken for delivery. So which is 1000 plus 500 into 12. So which means once my stock level reaches 7000 units in my godown, I should place the order. Reason is why means once I reach my 7000 units in my godown, when I place the order, every week, 500 units will be consumed and my stock start falling down. So by the time my stock gets replenished, I still have safety stock in my hand. So that is the idea behind this formula, safety stock consumption into time taken for delivery. So the correct answer in this case is option number D. Moving to the next MCQ, they are asking us to calculate valuation of the closing stock and under using FIFO method. Given data on 1st January, we do have opening stock of 500 units at rupees 4. They have given that on different dates, the receipts and issues are given. On January 5 and on January 12, we have purchased, or I can say the goods has come to the store. And on January 2 and January 18th, the goods were has gone out of the stores to the production. Now for that, I have roughly, to make you understand easily, prepared a stores ledger which you don't have to prepare while doing the exam. So for sake of ease of understanding, I have prepared a stores ledger. So if you look into it, opening balance it is given, which is 50 units at 4,200. Now material requisition slip on January 2nd, MRS's material requisition slip which we received from the production department. So that we will write in the issue column 30 units. Of course, FIFO or LIFO, whatever happened in the given case, since opening stock has only one price quantity in my godown, so I can take the same price 30 into 4, it will be 120. So the balance stock in my godown will be 20 quantity of 4 rupees, which comes to 80. Next, on 5th January, the material comes into the stores. So goods receipt note number we will be writing 100 into 5, which is 500. Issue column nothing we will write. And in my godown there are now two price stock items, which is 20 480 as well as 100 500. Then on January 12th, again further goods receipt note number, which means further materials is coming into the godown, 200 quantity at the rate of 4.5, which comes to 900. So now in my godown, 3 lot price items are there. One is 20 quantity, which was purchased on 4, 100 quantity at the rate of 5, and now 200 at the rate of 4.5. After that, the further production requirement comes in. So material requisition slip number on January 18th happens. So in the issue column, because we are following FIFO, first we have to open up with we will be dispatching the goods from the godown of the first stock which came in, that is 20 quantity 480 out of 150 units, 20 quantity gone. Remaining how many further items has to be gone, has to be removed. It is 130 quantity. There out for this 130 quantity, again 100 quantity can be taken from the rupees 5 lot, and remaining balance 30 quantity will be taken from the 4.5 rupees lot. So the balance in my godown will be only of the price 4.5 rupee item. Okay, so the remaining will be 170 and 4.5 rupees, and the value will be 765. So the correct option in this case is closing stock value is A, 765 rupees. Moving ahead to the next question, MCQ. Again, same question. I'm not repeating. Only thing is what they are asking us to find out a LIFO method. All the data are same here. So all my calculations are also same up to a particular point of time. So if you look into here, same what we have discussed in the previous question. So that same again, material requisition slip is same. Now goods receipt note comes in. Again it is same. So we will have two quantities in my godown. Going further, now goods receipt note third issue, which is a third item which is coming to the godown. So 4.5 rupees item. Now I have 3 rate items in my godown. Now comes the difference, which is material recognition slip on 18th. So now I need 150 items, so which will be entirely taken from the latest purchase, which is 200 at the rate of 4.5. So out of that, I will take 150 at 4.5, 675, and now in my godown, 200 into 480 rupees items is there, 100 into 500 items is there, and out of the 200, because 150 was used, remaining 50 is there. So the total my godown, the price or the value of the closing stock will be 805. So the correct answer is option number B. Moving ahead to the next MCQ, same details of the question, only thing is they are asking us to find out using weighted average method. So without wasting further time, so only in the area where the difference comes in, we are discussing and moving on. So everything is same. Even good says if not, yes, on 5th is same, 12th is same, only at the time of 18th, it will create an issue for me. So let's discuss about the 18th. On 18th, what will happen? Material direction slip number comes in. Now 150 quantity has to be taken. Now which price to be taken here? Here we will apply weighted average price. Now how to compute this weighted average price? You can see the value, which is 80, 50 plus 900 divided by the total quantity, which is 20, 100 and 200. So by doing that, we will get 4.625. Now that will be the rate which we will be using for recording the issue. So 150 into 4.625 is 695. Now comes another important part. Now remaining goods in my godown, how I should value? The simple thing to do is, out of the total quantity, how much is the balance quantity? So 20 quantity plus 100 plus 200 minus 150. That's it. That's how we need to do. Similarly, in case of value also, we need to apply the same logic. That is 80 plus 500 plus 900 minus 694, which is 786. So the correct answer in this case is question number 9 is option C. So the option C is the correct answer. Moving on to the 10th question, which is talking about EOQ question. They are interesting question, which is they are asking about finding out the extra cost if it will be incurred. So given EOQ is given is if to compute EOQ, we are given the details. Annual consumption is 45,000 unit. Ordering cost is per order is 10 rupees, and carrying cost is given rupees 10. Purchase price is given 10, and reordering quantity at present it is given 45,000. They have mentioned there is a discount of 10% per unit case if entire lot is bought at one stretch, at a one stretch if you are buying it. So what we need to do, how we need to do is, we need to find out what is the total cost at EOQ, and we need to find out what is the total cost if we accept the discount offer, and then we need to find out extra cost which will be incurred. Okay, so EOQ, applying the formula of EOQ, 2 into annual consumption into ordering cost divided by carrying cost. So the formula we are applying 2 into 45,000 into 10 divided by 10. It will allow us to find out the EOQ, and EOQ turns out to be 300 units. Now the cost at EOQ level we need to compute. For that, first purchase cost. So purchase cost I need to pay for the entire 45,000. I need to pay how much? Purchase price given is 50. So 45,000 into 50, it is 22,50,000. Now EOQ is 300. That means at a time I will be buying 300 quantities. If that being the case, how many times I need to purchase, which is nothing but 45,000 divided by 300 units. That will be the number of orders. Once we get the number of orders, we need to multiply it by ordering cost, which is given as 10 rupees. So totaling to it will come to 1,500. Similarly, carrying cost is nothing but how much cost for holding the inventory back. In the given case, since at a stretch I am buying at EOQ, I will be buying only 300 quantities. Here under EOQ there is an assumption. The assumption is that though we will be ordering 300 quantities at a time, we don't need space for entire 300 units. We need space for only average inventory, which is assumed to be half of it, which means half of the quantity, whatever the total quantity comes in, half will be going to the production, half will be storing in its godown. So out of 300, so carrying cost need to be calculated for only 150 units. So 150 units into 10, it will be again 1,500. So total cost of at EOQ will be 22,50,000 plus 1,500 plus 1,500. It will be 22,53,000. Now next case, That is, if you are buying at one complete lot, that is, if what will happen if you are accepting the discount offer. So yes, of course, my purchase cost will comes down, because purchase cost will be 50 minus 10 percentage, so it will be only 45. So 45,000 into 45, it will be 20 lakh 25,000. There is savings in purchase cost. Then ordering cost, of course, we are buying 45,000 at one stage, so only one order cost I will have to bear. So that will be only rupees 10. Okay, that is also cost saving. Now let us look into the carrying cost. What will happen to the carrying cost? Since I'm buying at a lot, full entire requirement of a year, which is 45,000. So half of the quantity will be there in the godown. So 45,000 divided by 2. For that, I need to calculate the cost. So carrying cost will be 45,000 divided by 2 into rupees 10. So it will come to 2,25,000, which is very big amount than that of the EOQ level. Now, totaling to everything, and I come to arrive at that my total cost of while accepting the discount offer comes to 22,50,010 only. So I have a better answer than EOQ in the given scenario. Now, in this case, the extra cost calculation will be very simple. 22,53,000 minus 22,50,010. So the correct answer will be, the extra cost will be 2,990, which is your option number D. Now, generally the EOQ gives us the correct answer, okay, or that is the optimum answer. How come in this case we have a better answer than EOQ? See, in EOQ there are various assumptions. One of the assumptions that EOQ takes is that we don't get any price discount irrespective of whatever the quantity I order. Here, one of the assumptions is violated. That particular assumption is violated because I am having a discount. So what happens in this case is, we may have a better answer than EOQ, because to EOQ to prevail, the whatever the assumptions of EOQ are there must be actually working. In the given scenario, one of the assumptions is violated, so there is a chance that I can have the better answer, and it happened here. It need not always be, but there is a chance that I can have a better answer. So that's why in the given, this is what this particular question picks. So that's your question number 10.